we don't see the need to undertake heroically large rate hikes. As we've tried to communicate to the markets and to the public, we feel that the approach that we should take it should be a gradual and measured approach. If we look, the reason for the recent rate hike was basically that we felt that the balance of risk had shifted in Thailand. We see that the growth recovery is more solid, more intact. The recent numbers have been coming out okay. And there's an upside, I think, to the growth forecast we have put out on the, especially coming from stronger domestic demand and tourism. But at the same time, as you mentioned, inflation has been tracking quite high. The latest outterm number was 7.6%. But again, if we look forward, there are reasons why, again, we didn't feel that there is a strong need for us to take a less measured or a less gradual approach, because if we look in Thailand, we're at a very different part of the economic cycle than in other countries which have undertaken perhaps more aggressive rate hikes. Our recovery is more gradual than theirs. We're of the countries that have undertaken rate hikes, we're probably the only one where we're still not back to, in terms of GDP levels, back to pre-COVID levels. So that is also something else that's conditioning our response and arguing why we're taking a more gradual approach. That, and also on the inflation front, we don't see, yes, the headline numbers are strong, high in terms of inflation, but we don't see any kind of demand side inflationary pressure. It's all been driven by the supply side. And if we look forward, going forward and ahead, we expect inflation to peak sometime, headline to peak sometime in third quarter before coming back into our target range next year. And we also see a relatively low probability for a wage price spiral in Thailand for reasons we can go into if you're interested.
Okay. So you see inflation remaining elevated for the rest of the year until it starts coming down next year. Do you worry about a stagflation scenario in Thailand?
Yeah. First of all, just on inflation, we see it peaking in third quarter, then starting to come down in fourth quarter, and then eventually coming back down to our target range of 1% to 3% next year. Stagflation risk in Thailand, short answer, low. Why? It's because I think our economic recovery is quite intact and fairly robust. That's not based on any kind of magic forecasting. That's just math. We're operating off a very low base. The thing that's going to be a key driver for us going forward is the pickup in tourism. Pre-COVID, we had 40 million tourists coming to Thailand. Last year, we had 400,000. Right. So this year, our official kind of public forecast was for 6 million, but there's a fair amount of upside to that number. We're probably expecting to see something north of 8 million tourists. So from last year, 400,000 to 8 million tourists, that's going to provide a strong basis for, I think, a good recovery in the headline GDP numbers. So the chances of getting a economic slowdown with high inflation, as per stagflation, I think is relatively low.